It is Thursday, February 12th, 2026. And today we are doing something a little different. We are cracking open the hood of a machine that, frankly, serves as a proxy for the entire global consumer economy.
We're talking about Anheuser-Busch InBev, the world's largest brewer.
Exactly. They just dropped their Q4 and full year 2025 earnings report this morning.
And I think for a lot of people, the assumption is, okay, they sell Bud Light and Corona. How complicated can it be? But when you actually read through the transcript from the CEO, Michelob, and look at the slide decks,
Yeah.
it's just not really a story about brewing beer anymore.
No, it isn't. I went through the materials this morning, and my biggest takeaway wasn't about hops or barley. It was about how this massive legacy company, I mean, we were talking about a business with roots going back 150 years, is trying to pivot.
In a world that's becoming sober curious, digitally native.
And economically volatile. So the mission for this deep dive is to look past the headline numbers and figure out, is this a beer company or is it becoming a tech platform that just happens to sell liquids?
That is the central tension. And we have the data here. We're going to look at how they're navigating anti-extravagance trends in China, why the weather in Brazil matters more than you'd think, and the hidden gem of their business, which has almost nothing to do with alcohol at all.
We will definitely get to that hidden gem, that digital marketplace, because it honestly blew my mind. But we have to start with the money. The headline is that they generated $11.3 billion in free cash flow.
Just a staggering amount of cash.
But when I looked closer at the report, I noticed something a bit contradictory. Revenue is up, cash is up, but the actual amount of beer they sold, the volume is basically flat, or even down in some places.
You spotted the divergence. That's the whole story. Revenue grew by 2% globally in 2025. EBITDA, that's earnings before interest, taxes, depreciation, and amortization, grew by 4.9%.
So profits are growing way faster than sales.
Exactly. But you're right, the actual volume of liquid moving out the door was, and I'm quoting them here, below potential.
So help me understand the physics of this. If I'm a bakery and I sell fewer loaves of bread, I usually make less money. How is AB InBev selling less beer but making significantly more profit?
It comes down to a strategy they call premiumization. This is the engine driving the whole ship right now.
Premiumization?
Yeah. Think about the unit economics of a bottle of beer. It costs roughly the same amount to brew, bottle, and ship a value brand beer as it does a super premium beer. The glass costs the same, the truck costs the same.
But the price tag is way different.
The price tag on the premium bottle might be 50, even 100% higher.
Yeah.
So the margin on that bottle is just, it's fat.
Right. So they don't necessarily mind if total volume drops a little bit.
As long as the people who are buying are shifting their spend to the expensive stuff, they are aggressively tilting their portfolio toward brands like Michelob, Ultra, Corona, and their craft beers. They're trading volume for value.
Okay, that makes sense. You'd rather sell one Ferrari than 10 Toyotas if the margin is right. But there's another piece to this profit story, right? They mentioned efficiency about a dozen times on the call.
Oh, absolutely. They expanded their margins by 101 basis points. In corporate finance speak, that is a home run.
101 basis points.
A basis point is 1/100%. So expanding margins by a full percent on a company this size is massive. And they did this despite what the CEO called a constrained consumer environment and unseasonable weather.
Constrained consumer is a very polite way of saying people are broke.
Or at least very careful with their wallets. But this operational discipline allowed them to do something critical: deleveraging.
We hear this term a lot, deleveraging. Break that down for us. Why should we care if AB InBev is deleveraging?
Well, think of it like a homeowner with a massive mortgage. A few years ago, AB InBev bought SABMiller, and they took on a mountain of debt to do it.
Like buying a mansion with a high-interest loan.
Exactly. And every month, a huge chunk of your paycheck goes just to paying interest to the bank. You can't renovate the kitchen, you can't fix the roof, because the bank gets paid first.
So deleveraging is just paying down the principal early.
Precisely. They repurchased $2.7 billion of their debt this year. By paying that down, they reduced their future interest payments. That frees up cash to do other things like buy back stock or invest in new tech. It's about regaining freedom.
And they did a $6 billion share buyback and a 15% dividend increase. That's them telling Wall Street, the mortgage is under control, we're distributing the cash.
The ship is steady.
So the ship is steady, the debt is going down, but you can't cut costs forever, you eventually have to grow. And this is where the report gets really interesting to me. They identified these two growth rockets: beyond beer and non-alcohol.
This is the pivot. Let's talk about beyond beer first. This is everything that isn't traditional beer can, cocktails, seltzers, spirits. That segment grew revenue by 23% in 2025.
23%. That's wild for a mature industry. And I keep seeing Cutwater everywhere. That's their canned cocktail brand, right?
It is, and the numbers on Cutwater are, well, they're staggering. In the U.S., it grew revenue in the triple digits.
Wait, triple digits, so it doubled or more?
Yes, in the fourth quarter, Cutwater was the #1 share-gaining brand in the total spirits industry.
Not just canned cocktails, the entire spirits industry.
Correct. That means it's beating out vodka bottles and whiskey bottles in terms of gaining market share.
That feels like a fundamental shift in how people drink. I mean, I've noticed it at parties. People don't want to stand in the kitchen squeezing limes. They just want to crack a can and have a bar-quality margarita.
It's the convenience factor combined with the quality. And they're not stopping there. They're taking a brand called Flying Fish, which is this flavored beer and spirit hybrid from Africa.
A beer and spirit hybrid.
Yeah. And they're launching it now in Europe and the Americas.
Mm.
They're taking these successful local experiments and porting them globally.
Okay, so that's the get a buzz strategy. But then there's the exact opposite, which I find even more fascinating, the non-alcohol boom.
This is huge. Non-alcohol beer revenue increased by 34%. And we have to be clear, this is not about selling O'Doul's to designated drivers anymore.
Right, because for a long time, non-alcoholic beer was sort of the penalty box. It tasted like wet cardboard.
It was terrible.
Yeah.
But AB InBev treated this as a technology problem. Between 2020 and 2022, they invested heavily in proprietary dealcoholization tech. They basically figured out how to remove the alcohol without stripping out all the flavor.
I've tried the Corona Cero, and honestly, it's hard to tell the difference.
And that's the goal. In South Korea, they just launched a zero beer. It has 0 alcohol, 0 sugar, 0 calories, and 0 gluten.
Okay, let me play devil's advocate here. At that point, aren't you just selling expensive water? Why would anyone buy that instead of, I don't know, a soda?
It comes down to what they call the participation strategy. This is the key insight.
Participate.
Think about a Tuesday lunch, or right after a 5K run, or work dinner when you have a presentation the next morning. In the past, you'd drink water. You wouldn't feel like you were participating in the ritual of having a beer.
So it's about the social signal.
Exactly. Holding a Corona Cero feels different than holding a Diet Coke. It lets you stay in the beer occasion without the alcohol. And for them, this is pure gold because it's incremental. They aren't cannibalizing their Saturday night sales. They're monetizing your Tuesday lunch.
They're creating drinking occasions that just didn't exist for them before. That's smart.
It's expanding the whole market.
Let's bring it back home to the U.S. market. For a few years, the narrative around AB InBev in America was, let's call it troubled. They had boycotts, volume drops. Is that officially over?
It looks like the turnaround is real. In 2025, they gained market share in both beer and spirits in the U.S. That is a very big deal after the volatility of the last couple of years.
And it's the big names doing the heavy lifting, right? Michelob, Ultra AA, and Busch Light.
Correct. Those two were the top volume share gainers in the entire industry. And this speaks to a psychological trend the CEO highlighted, the return of mega brands.
Mega brands.
In times of economic uncertainty, consumers retreat to what they know. They stop taking risks on the $18 4-pack of some obscure craft IPA, and they go back to the trusted name. Mega brands now represent 57% of their total global revenue.
So, stability sells. Okay, let's pivot to the thing that I think is the most surprising part of this entire report. We've talked beer, cocktails, 0 alcohol, but the fastest growing part of this company is a digital platform called Bees, and they're selling things that have absolutely nothing to do with brewing.
This is the hidden gem. Bees is their B2B digital platform. To understand it, you have to picture the user. Picture a small shop owner in Colombia or a bodega owner in the Dominican Republic. Let's call him Mateo.
Okay, so Mateo runs a small shop, sells beer, chips, soda.
Right. Historically, once a week, an AB InBev truck would show up, take an order on a clipboard. But AB InBev realized they were the most reliable logistics partner Mateo had. So they built an app, Bees, and said, Mateo, just order your beer on the app.
Standard e-commerce so far.
But then came the leap. They realized Mateo has other pain points. He needs sugar. He needs cooking oil. He needs rice. But the distributors for those products are unreliable. So AB InBev said, hey, we already have the trucks. We have the app. Why don't we just sell you the rice and the oil, too?
So they're becoming the Amazon for the bodega.
Yes. The gross merchandise value, or GMV, of this marketplace reached $3.5 billion in 2025. That's up 61%.
61%?
But here's where it gets into fintech territory. They notice Mateo has customers coming in who want to top up their mobile phones. They buy phone minutes, airtime, and cash at these little shops.
Right, pay as you go.
Exactly. So AB InBev added a feature to Bees. Mateo can now buy digital inventory phone credits directly from them through the app and then resell it to his customers.
Wait a second. So a beer company is acting as the middleman for mobile phone data.
Yes. And think about the margins on that. There's no truck. There's no glass bottle. It is purely digital. They're monetizing the relationship they have with the retailer. They're even starting to offer credit lines because they know Mateo's sales history better than any bank does.
That is actually kind of genius, but I have to be the skeptic here. Does a brewer have the DNA to run a fintech operation? It feels like a massive distraction. If I'm an investor, do I want my beer company managing credit risk for bodegas in Colombia?
That's the risk. You're moving from a business of manufacturing to financial services and logistics. But the insight here is that this makes the core beer business sticky. If Mateo runs his whole business on the BS app, his credit, his phone sales, his oil, he is never going to switch to a competitor's beer.
It locks him into the ecosystem, the Apple strategy, but for beer distribution.
Fascinating. Let's zoom out again. We've covered the U.S., this digital transformation, but it's a global company, and there are two massive markets that tell very different stories: China and Brazil. A tale of two giants. Let's start with China, because it has been rough. Revenue there declined by low teens.
Which is significant, and the report mentioned anti-extravagance measures. What does that actually mean on the ground?
It's a cultural shift. In the past, business in China was often done over, lavish dinners, expensive bottles of liquor, VIP tables at nightclubs. The government has cracked down on that, but it's also a social shift. There's less showing off. The nightlife channel is struggling.
And people are just going out less in general.
Yes, the channel shift is real. People are moving from the on-trade, so restaurants and bars, to home delivery. And if you're sitting on your couch, you're not ordering a $100 bottle of premium beer. You're ordering a six-pack.
So how do they fix that?
They're trying to premiumize the home. They launched these 1-liter cans of Budweiser and these full open-lid Corona cans where the whole top comes off so it drinks like a glass. They're trying to create home rituals to mimic the bar. The good news is their market share did stabilize in Q4, so the bleeding might have stopped.
Okay, so China is in repair mode. What about Brazil?
Brazil is the comeback kid. They had a terrible start to 2025, and this is where we had to talk about the weather.
We always joke about weather being an excuse companies use when they miss their numbers.
It sounds like an excuse, but in Brazil, it is fundamental physics. So much of the beer consumption happens outdoors at street corners, beach bars, open-air barbecues. If you have torrential rains in São Paulo for 3 weekends in a row, those places clear out. Millions of liters of beer just go unsold.
So the sun came out in Q4.
The weather normalized, and boom volume growth returned in December. But it wasn't just the sun. Their premium brands in Brazil grew volumes in the high teens. So similar to the U.S., Brazilians are drinking better beer when they do drink.
All right, let's look forward. It's February 2026. We have the Winter Olympics happening right now. But the CEO called 2026 the year of sport. What's the big play here?
The big play is the FIFA World Cup 2026. And you have to remember, this one is taking place in North America, the U.S., Canada, and Mexico.
I can't wait. It's going to be massive.
The scale is unprecedented. 104 games, 3 countries. For a brewer, the World Cup is always a good event. But having it in their most profitable market, it's a perfect storm.
And Budweiser's the sponsor, right?
Budweiser's been a World Cup partner for decades. And guess how old Budweiser turns this year?
I saw this, 150 years old.
Exactly. So you have a 150-year anniversary combined with the biggest sporting event on the planet in their biggest market. They are guiding for EBITDA growth of 4-8% organically this year. They're betting heavily on sports.
It feels like the stars are aligning for them, assuming the economy holds up. So let's wrap this up. Let's summarize what we've learned.
Well, we have a company that is managing a really complex transition. On one hand, they are squeezing every ounce of efficiency out of the traditional beer business.
The cost-cutting, the premiumization, paying down debt, that's the cash cow.
Right. And with that cash, they're funding these wild experiments. They are building a fintech company in Latin America with BEs. They're using high-tech chemistry to make non-alcoholic beer that actually tastes good. And they're turning spirits into a canned convenience product.
That's the summary. It's a lesson in not being sentimental. They aren't sitting around crying that people aren't drinking Bud Light like they did in 1990. They are aggressively going where the consumer is.
Whether that's on a smartphone app, ordering phone credit, or at a gym drinking a zero-alcohol beer.
It really challenges the definition of what a consumer staples company even is. And I want to leave you, the listener, with a thought to mull over. We talked about BEs growing at 60%. If that platform keeps expanding, selling everything from phone credit to rice, at what point does Wall Street stop valuing AB InBev as a brewer?
That is the billion-dollar question.
At what point do they become a logistics and fintech company that just happens to make beer on the side? It sounds crazy, but looking at these numbers, the beer might eventually just be the loss leader to get you onto the app. It's a distinct possibility.
Something to think about next time you crack open a cold one. Thanks for diving in with us today. Until next time.